3-day?
It is 3 plus 3. So the right of rescission doesn't run in conjunction with 3 days, because you have to get the CD 3 days prior to signing the note. And of course, then the note, once you sign that, there's a 3-day rescission period.
In a purchase transaction, if you have the buyer and seller negotiate on a closing cost credit in lieu of repairs, that's going to require a new LE? Yes or no?
Well, it depends on when that information becomes available. So
typically that's done probably a couple weeks into the transaction because you're doing a home inspection.
Sure. Yeah. So you're processing your loan. It's going around. Hadn't gone to underwriting yet. And now all of a sudden there's a $1,000 credit. Then that's a changed circumstance, and we just produce a new LA.
And then you say, I think the waiting period, is there always 7 days after the LAE has been provided that you can't close?
Well, that really that's only that first period. In other words, you cannot close a loan sooner than 7 days.
Okay.
I didn't really touch on that. It's in the presentation. I didn't touch on it because, can you close a loan in 7 days? No. Let's be real. Well, that's not a loan. We got to get to the back of the room.
Regarding the yield spread premium, the lenders paying the broker's fee, where is the broker's fee disclosed?
The broker's fee is not disclosed on the LE. On the CD, it would be in block A, and it would show as paid by others.
Paid by others, okay.
Okay, so the question is, yeah. So the pricing, let me try it this way. So the pricing on the rate sheet is 103, of which you retain 2. So the credit to the borrower is 1 point. So 1 point, let's say a $200,000 loan, you'd have a $2,000 credit in section J, and then you'd have $4,000 as lender paid compensation paid by others up in A.
So it's not disclosed.
So it won't total into his costs, but he'll see this $4,000 as being paid by the lender.
Okay, this side. Here we go.
Okay.
In the corner.
Oh, yep.
Okay, so let's talk about realtors for a minute because I'm kind of fond of those people. How is this going to affect loan contingency removal?
So how will it affect loan contingency removal? Probably not. So usually loan contingency means you want a loan approval. So the only impact is going to be in that initial providing that LE and getting their intent to proceed. So if it's mailed, so let's say that you have a borrower that doesn't accept electronic signatures. So basically you produce that LE, you got to wait 3 days. Borrower goes to a lender or a broker. They run a credit report. They might run them through an automated engine. They get an approval that basically says, yeah, you're approved, your credit's good, your income is good, your assets look good. But guess what? That's just data. Now we need the verifying documentation. So then that verifying documentation is assembled, check stubs, W-2s, tax returns sometimes, bank statements. That all comes together, is reviewed by an underwriter who says, yep, everything's good. Now what can screw that whole process can get screwed up with, you don't get a check stub, you get a statement of earnings, and you don't get a W-2, you get a 1099, and you get a tax return that's got $25,000 in business expenses, and you get a bank statement that's got a $40,000 deposit 2 days ago. Those have all got to be explained and looked into. So that's what pushes things out.
Hello.
Yes.
Okay, back to the LE. I have 3 questions.
Okay.
A, C, and E. So block A, I'm a contract processor, so where do I put my fees?
Well, your contract processing fee would be in box probably B.
Right now, we do an A in GFE, right?
If you do it in A because your contract processing services are paid by the broker, or do you get a
No,
check?
I get directly from escrow. The client paid for it.
Yeah,
Most
it
lender
should,
allows that.
should be in B. It's a service that the borrower cannot shop for. Just like an appraisal fee.
All right, and then C, where it says 10% tolerance, does that mean it only can go up 10%? What about lower?
Oh, it can go as low as you want it to.
Okay, got it. That's good to know. And then E, where it says transfer tax, you said only disclose if it's paid by buyer.
Yes.
But most transfer taxes in Southern California is paid by seller.
Then you can leave that blank. So here's the challenge. So if it's customary, Southern California, the seller pays it, you leave it blank. The purchase contract comes in and you don't catch it. Happens that there's a little statement, buyer and seller agree to split the transfer tax. Well, once you get that information, that's a changed circumstance. You can redo the LA.
Well, is it a good idea to always disclose it anyway? Just for
It's
the
not
heck
a
of it?
bad idea, because that way, if it's paid by the seller, lower is always better.
Okay, thank you.
Actually, two-part question. Number one, I think I know where I put it in, but as you know, there are developments that have private transfer fees. So I'm assuming that's going to have to be in the LE as well, disclosed, because we know what they are ahead of time.
Yeah.
And is that going to be B, because buyer can't shop for it?
I would think it would be in B.
Okay.
And that's, I might want to get back to you on that.
Yeah, because you do have that, that's on many of the properties that have actual private transfer fees. My next question has to do with a time of funding when we get last minute prior to fund conditions. One of them that usually comes up has to always do with insurance, and suddenly there is a realization by the underwriter that they feel there's an inadequate coverage on the insurance, and so therefore the insurance cost will go up. What happens at that point in time, and how long will that hold things up?
It shouldn't trigger a new 3-day wait. It will certainly trigger a quick review by an underwriter, make sure that the payments, that the debt DTIs are still on.
Okay.
But it's not going to change the ABR. So you're not, worst case is you get a new CD, but no new 3-day wait.
Okay, great. Thank you. And you'll get back to me on the private
Yeah.
fees. I'll give them a card. Thank you.
Hello, I'm on a contract processing side also. I have a question in regards to the fee on a purchase transaction. As you know, all the fees have to be included in a good faith estimate. But on this loan estimate, once you get those 6 items, you have to send this out. Then you would have to send another one out once you get the actual fees from the title company, title and escrow?
Well, that's a yes and a no.
Come on, I need one
Okay,
better.
so here's the no.
Okay.
If we issue an LE and we say Fidelity National Title and they pick Fidelity National Title, we got to live with that. If we issue it and it says Fidelity National Title and they pick Stewart, then we can change.
Then I have another question, only because I prepare the initial applications and disclosures. So this has to go out first. 3 days later, I can send out my total initial application and disclosures that includes my intent to proceed and then the hard copy date on those applications and disclosures has to be 3 days after this one?
No, your application should be dated first.
Okay.
And then the regulation also is a little specific about what goes out and when. So they don't want a 70-page PDF to be sent to the borrower with the LE in there somewhere. They want the LE and the service provider list separate. Then you can have your intent to proceed and all your other disclosures. Depends on when. It can be, you can send that all basically same day in 3 separate communications. They just want to make sure it's, the LE isn't part of 70 pages of other stuff. All right, in the back.
I'm just curious.
So am I.
On an owner-occupier or owner-carryback, would any of this be required?
Private second, probably not.
Private first?
No.
Okay, perfect.
Now, you might want to do a little research in the regulation, because if you have somebody that's doing private first, like 100 of them a year, then they're probably going to be part of this. But really, it's probably not, they're probably not going to have to worry about it. Thank you. We have an attorney in the room.
You had said that you don't have to have a lender on the front page, but then you said that would be weird with the loan ID because it has to match all the way through. Can you not have a loan ID?
No, you can't. You gotta have a loan ID.
Okay, and then
I will say this: there is some ambiguity about that.
and the seller's portion of the title policy.
Yes.
Perfect. Thank you.
Over here on the left. I just want to follow up on that last question with regards to the loan ID. Over here.
Oh, there you go.
I guess my left. So as being a loan broker, you know, a lot of times we have a lot of options like Sierra Pacific, and we don't really know where we're going to send the loan. So I'm assuming that having a loan ID number start to finish is going to be somewhat of a challenge. So I'm assuming, I'm just thinking out loud here, is the fix that we're going to go to, we're quoting a borrower when we have the 6 pieces of information, going to 2 different, maybe generating an LE from Sierra Pacific and issuing that to the client, and then also doing another LE with another bank with a separate ID at the same time. It seems like it would be the only logical thing in my mind that you would be able to offer the borrower a choice or some sort of a backup. Is that what you guys are seeing is going to happen, or is that something that we're not allowed to do?
Well, unfortunately, we believe that will happen, which means we will be doing work for transactions that will never close. And that is a concern to us as a lender, just sheer volume of workload. But that very well likely will happen. Now, what could also happen is some of that research is done in advance of identifying a property, so that you're kind of honing in on where you think, because it's not just rate and fee, it's, you know, there are underwriting considerations that vary lender to lender, and so that can be a determining factor as well. So I think you'll find yourself working a little more closely with your lending partners. But I'll tell you, it's going to be a struggle for all of us, and unfortunately there is no phase-in period. One question that I'm usually asked, but haven't been asked yet, is A, is it going to be delayed? No. It is not going to be delayed. Now, what may happen is there could be some, oversight phase-in, some lender relief if you're making good faith estimates to comply as far as enforcement action, but there will be no delay. I mean, this is a challenge for everybody, and I'm telling you, we're going to work through it, and we're going to figure things out as we go a little bit in August and September.
And then one follow-up question quickly on the second page of the LE under section B. I have a note here that you said that these fees cannot change. So it can't even go down?
It can go down.
Oh, okay.
Down is always fine.
All right, that makes me feel a lot better.
Yeah. So for example, let's talk appraisal fees. So let's say a third of the time you're doing a rush appraisal fee, and that's an extra 100. Then quote them all with a rush fee of an extra 100 or whatever it is. And if it's lower, yeah, you're fine. It's just as long as you're in, don't quote an appraisal fee of $2 grand, when you know it's going to be $450.
This is Woody Henderson, American Dreams Real Estate. You had touched upon.
Thanks for coming.
Thanks. You touched upon the pre-approval letter. You kind of glossed over that. What's the plan for providing pre-approval when we're just working with our clients in the field, trying to get our offer in and with credibility up front?
So, we will, that's kind of a Linnell question, because, today if we were asked to do pre-approvals, quite frankly, we wouldn't be really in favor of that with today's volume. But going forward, it will probably be something we'll do more of. I mean, you can always come and access the AUS engine, do your credit report, run your AUS, have an idea of what your borrower can look for. Of course, the challenge is they come in and you run them for a $300,000 loan and everything's great, and then they come back and tell you they just bought a house for $595 and they need $450 for a loan. That's the challenge. So, I think the most important thing when you're talking to borrowers about pre-qual and doing pre-approvals, at that point, you can say, well, if you want me to do a pre-approval for you, give me a month's worth of check stubs, give me your W-2s, let me see your bank statements, and look at the documentation, make sure it all makes sense. I mean, back in the old days, when we had IBM Selector 2s, and I sat across the kitchen table taking an application from somebody, in my mind, I knew, all right, they need X amount of dollars, and they need to have X amount of income and X amount of assets. And invariably, I'd get the assets, and I'd say, well, did your agent give you an idea about how much money you need? Yes. Well, before I can finish your approval, I need to verify that. And you need $3 grand, and you only got $200. Where's the rest? So it hasn't changed
Hey,
in a gazillion years. Please.
on forward locks, when you talked about it, to be able to do forward lock, do we need to have the LE signed or sent out?
No, it's just going to need to be done. So, for example, we envision this process. You'll come to the website, you'll register a loan, you can run the AUS, do the RALOC, and order the LE all at the same time.
I've heard a couple people talk about contracts are going to change, and I don't understand why. The only thing I see that, other than closing date, as far as the realtor side, the contracts are going to be pretty much the same.
You're probably correct. What will likely change, and does that answer your question?
Yes.
No, what's likely going to change is we're not going to want you to issue the LE with our name on it unless you're doing so through our engine. So that really is the only likely change. Yes.
Okay, so I have a question about requiring documentation for pre-approvals. I think you said for the loan estimate, we cannot require them to provide.
Correct.
But for a pre-approval, we could have gotten it before for the pre-approval?
So let's say, are you a mortgage broker?
Yeah.
So you have a little policy that says, hey, borrower wants to be pre-approved, this is the process, and this is what we need. Check stubs, W-2s, bank statement, credit report, AUS. That's fine. This law regulation does not eliminate the ability to pre-qualify and pre-approve people.
And send the application out as one DocuSign, and the LE and the service presider as another DocuSign, and they can be signed on the same date, but they want them in separate PDFs?
Yes.
Okay.
Well, you could have separate documents within one communication, but you don't want to put them all in one giant PDF.
So with DocuSign, you can bring in the PDFs and separate them, and that's fine as long as we send them to the lender in separate PDFs.
Yeah, because the lender, the first thing we're going to ask you, you kind of come to our website and want us to produce an LE. The first thing we're going to say is, when did you take the application? Because if you took the application on May 22nd and you're coming in on